Hey everybody, welcome back to Grain Markets and Other Stuff. Thank you for joining me. It is mid-morning here on Tuesday, March 2nd, and I figured I would do a quick run through of the December corn chart. We'll talk about some key support areas, some key resistance areas, maybe some targets in both directions. This will be very short and sweet and to the point. Thank you for tuning in. Thank you for watching on YouTube. Remember, if you have not already subscribed to the channel, make sure you subscribe. Make sure you hit that like button. It will help YouTube to distribute these videos out a little bit further. And if you're listening on the podcast, make sure you leave me a review. I could certainly use some more reviews on the Apple Podcast app in particular. Remember, guys, as always, if you need some help from me, go to my website. It is www.standardgrain.com. You can go to that website and click on Grain Marketing Plan here in the upper right-hand corner. For $49 a month, I offer a subscription service. It includes a bunch of stuff. You'll get my morning email, which goes out every business day at 6:30 a.m. Central Time. You'll get my text message service. You'll get any sort of consulting that you need. If you have a question about a cash grain contract or some sort of marketing plan that you have, or just your marketing plan in general, I'm kind of here to help you out with that. This is a monthly deal. It's billed to your credit card through PayPal. You can cancel it absolutely anytime. So certainly check that out if you're looking for more information like this and really more in-depth stuff. You know, I really just kind of get to the tip of the iceberg with these YouTube videos, but I really get in a lot more depth and into a lot more detail in the newsletter. So certainly give that a shot. I'm going to put the corn chart up on the screen here. This is the December 21 daily, and the chart reviews that I've done in the past to this point have been mostly old crop or either continuation charts. This is just the December 21 contract, and I've got it starting here back in August, and that's when I would argue that the uptrend in this market began. We had a significant low over the summer, and the uptrend kind of began with that August low. This first line here I have on the chart is this blue line that runs up from that August low through the October low. And I would probably make the argument that long term, that's our uptrend. That's the long-term uptrend that's been in line since August. The interesting thing about this is that the market could move substantially lower while maintaining this long-term uptrend on a day like today. And keep in mind, the uptrend moves higher every day. So every day it's a different number. It goes up by a couple cents every day. But today, the trend line, the long-term uptrend line that began in August, sits at like $4.14. So technically speaking, this market could drop, I mean, a good 60 cents almost, while still maintaining what has been a long-term uptrend, in my view. There are other people, of course, who would look at this chart and do things differently. So long-term, the trend that began in August could really remain intact on a break all the way down to 414 today. And of course, that number moves higher by a penny or two every day. So that's one thing to keep in mind, that in terms of the long-term uptrend, this thing could be a little bit ahead of itself. Now, there's maybe a secondary trend here, and that's this orange, we'd call it a trend channel that I have on my screen. And this one I started with the October low, although you could probably run it all the way back to the August low. I started with the October low, which was, let's see, 381 back from October 29th. And then I ran this line up through the January low, which was 423 and a half. And this particular uptrend line provides you support on a day like today at 442. So if you're to use this version of the chart, you're going to get a different number. 442 would be kind of your big downside target here. Now, when you use a channel like this, you'll also be provided with an upside target. And in this version of it, if you're looking at it on the screen, the upside target's actually not that far away. On a day like today, it would be about $4.89 would be the upside target on this particular trend channel, these two orange lines. So I'm going to have that 488, 489, and again, this goes up a penny or two every day. That'll kind of be something that I keep an eye on in regard to the new crop corn chart. The other two numbers that I think are very obvious levels of support and resistance. I mean, your contract high at 479, it was posted just last week on the 25th. 479 even is the contract high. That's your big hurdle above the market that we've got to get through if we're to go up and test this upper channel line, which again is today about 489, and it's going to move higher by a penny or two every day. And then to the downside, I mean, I'd say that January low, that was the big correction that we had. It occurred from mid-January through late January. Basically, we had an initial peak at right here on January 13th at 465 and a half. We went all the way down to 423. So we had, a 42-cent correction there in mid-January. That's your other kind of support area to think about. If you were to crack below this orange channel line, 423 and a half is a big number. So this is a very obvious and simplistic view of the new crop corn chart, some levels to keep an eye on. If you have any questions about this, shoot me an email to info@standardgrain.com. As I've said in the past, I tend to keep my charting and my technical analysis extremely simple. I really don't do much other than identify past highs and lows. I look for trends. I try to identify where those trends come in. I really don't do a ton with a lot of your crazier or more complicated indicators. I very rarely get into even something as simple as moving averages. I don't get into Bollinger Bands or anything along those lines. But if you have questions about this, let me know. I'd be happy to answer those questions. Remember, if you guys do need some additional help from me, go to my website, check out that subscription service. Tomorrow, I'll be publishing a video. It's not going to be live, but it'll be out sometime early Wednesday afternoon. I'm going to have a discussion with Ken Morrison from Morrison on the Markets regarding the acreage mix this spring. And if you're interested in that, it'll be up. You'll see it, and it'll be on the podcast and the YouTube channel. Everybody have a great day today. I will catch you tomorrow morning.